What's going on, guys? Welcome back to another video. So what we're going to be discussing in this one is this massive $1.7 trillion loss by one of, if not the largest at the time, hedge fund asset managers in the world. Now, I know this number, $1.7 trillion loss, might spook a lot of you guys. Well, we're going into some of these really crazy periods with the market. Again, we're going to be having Fed Powell tomorrow giving us either the 75 basis point hike, the 100 basis point hike, and we really need to hear what's going to basically their expectations of if we're going to be seeing rate cuts in 2023. We still have inflation running really high, and with these large funds taking these significant losses, what does that mean for the market going forward? And is this really an issue at the current time that we really need to worry about? So before we get into all of that information, if you guys wouldn't mind dropping that like down below, engage with the video, and drop a comment down below if you do like this new video format, and subscribe if you guys would like some more videos like this as well. So let's get right into it. So when we're coming over here, this is one of the articles talking about this $1.7 trillion loss. There's a couple of very key things that we need to keep in mind here, though. The world's largest asset manager, BlackRock, lost $1.7 trillion in the first 6 months of 2022. Now, if you're thinking about what happened with the overall market in this time, it has not been pretty at all. If you're holding any shares long in basically any stock in the overall market, unless it's VIX or some sort of inverse stock or any one of those inverse ETFs, you've been taking some pretty significant losses, and these large funds are no different here. So $1.7 trillion down the drain, disappeared. But when we take a little bit of a look deeper, BlackRock, the largest asset manager in the world, has confirmed a $1.7 trillion loss in the first half of 2022 as rife inflation and recession eat through financial markets, things that we already all know. They lost the $1.7 trillion in 6 months on the back of tremendous success, becoming the first firm to hit $10 trillion under management in the fourth quarter of 2021. BlackRock has revealed outrageous losses for the first 6 months of 2022. But when you think about this here, if they've been the first firm to get up to $10 trillion, well, they've already made very significant gains over the last couple of years. Now, the drawdown that they're seeing with the overall market, yes, it's very significant in terms of a dollar amount, but when we look at this right here, BlackRock reported its assets under management had fallen 11% in 2022. According to the asset management firm, it lost the $1.7 trillion. It is now around $8.48 trillion right here. Well, it's only 11%. And again, that is very significant, but the overall market is down a lot more. Now, we need to also take a look at what actually makes up BlackRock's holdings and assets under management, because that's a very important thing that we need to look at here to really understand where these losses are coming from. When we come over to this page right here, BlackRock's $7 trillion assets under management, now this was back in October of 2019, was dominated by index and ETF products, meaning that these are basically publicly traded instruments that you and I can go out and buy in the open market. Now, when we come over here, BlackRock funds were also hit by the $17 billion in losses on Russian exposure. So they've been taking the losses from all of the inflation fears, the recession fears coming up, the Fed actually increasing those interest rates, in really increasing the discount rates that a lot of these companies are going to have built into their discounted cash flow models, which is going to suppress their current valuations. Now, what exactly does make up some of these BlackRock funds, and what exactly happened here? Because this is what we really need to think about. Well, these are the lists of some of the largest BlackRock ETFs. iShares Core S&P 500 ETF, inception date May 15th, 2000. When we take a look at IVV here, which is this actual ticker, well, what exactly happened? Well, when we come over here, you can get a very, very, very clear picture as to exactly what was going on with IVV the entire year. Remember, we like to trade with 1348 in our group, and it tells you a really important picture. It's a momentum indicator, and it's very, very, very accurate. It's the most profitable EMA crossover that is out there. And when you're looking at IVV right now, back in January, you saw this daily cross down. Now, this drawdown that you saw from this daily cross down, let's see right here, trading right here, coming all the way down, 7.56% decrease in the overall share price of what we were seeing on IVV. Now, when we take a look a little bit further, we see this cross up right here. It was pretty short-lived, and recently we have seen very significant losses. Now, what percentage were these losses with 1348? Well, you see this cross down right here, closing candles below the 200 EMA, and it blows through every level of support. Now, when we take a look at this chart here, let's just go from the closing candle on the daily below this 200 EMA right here. Well, we come all the way down to the recent lows, 16.82%, and for where we're trading at right now, it's about 10.19%. So, most of BlackRock's losses were mainly attributed to all of these ETFs just coming back to a normal level as we're starting to see the Fed and a lot of these other economic indicators as well really shift. Over the last 2 years, we've seen basically lending at super high rates. It was really easy to get your hands on money. The Fed was printing all of this money as well, and a lot of it was going into the equity market. Now, when it starts to come out, you see things like this happen. Now, because the Fed was pumping so much money into the economy previously, well, yes, obviously BlackRock and institutions like this are going to see significant increases in their assets under management, especially if they have a lot of index and ETF products, as the market is absolutely skyrocketing. And when things come down, again, guys, you can play this both ways. In our group, we alert on over 450 stocks on a wide variety of different time frames when these crossovers happen. We also do 55 private live streams every single month. We're Opera and CBOE certified. We have trading algorithms that actually trade these daily crosses for you. So if you guys are interested in that, make sure you guys check out that link down below. But again, looks like BlackRock would have just had a lot more success if they were just trading with 1348. But again, they have so much money that they are managing. There's this concept called slippage, where it's very difficult for these large institutions to get in and out of positions without actually influencing prices. So to kind of wrap all of this up right here, and when we're thinking about where the market is kind of headed over the next few weeks and months, again, a lot of these large institutions are going to be taking these very significant losses. We've seen Melvin Capital close. We've seen 3AC in the crypto market having significant losses as well. In these types of funds and these fund closures and these big significant losses that we are seeing, this is not going to end here. We are going to continue to see these funds take significant losses until the market starts to trend back up. Now, again, referencing what we said a little bit earlier in this video, just kind of talking about what we're looking for going into tomorrow with Powell. If Jerome Powell comes out and is in agreement with the potential to have rate cuts at the end of 2023, that does provide some opportunity for large institutional investors like BlackRock to start funneling money back into the market because they know that there is a light at the end of the tunnel. And that the markets are going to return to some sort of normalcy within the next 2 years. So that is going to wrap up this video, guys. If you guys did enjoy this video, please go drop a like down below. And again, comment if you do like this new format. Subscribe for more. And again, if you are interested in learning more about the 1348 strategy, make sure you check out that link down below. Other than that, guys, I will see you guys in the next one. Peace.